There. Time for business now. Charles Pellegrin is with us. He's going to focus on the Ukrainian economy today. 4 years on, of course, from Russia's full-scale invasion. Where do things stand, Charles?
So a good starting point for this would be to look at potential reconstruction costs. The World Bank, along with the United Nations and the EU Commission, have just released fresh estimates on this, and they're higher than the last ones. Basically, $588 billion will have to be spent over the next 10 years to rebuild the war-torn country. That's about 3 times the current GDP. Losses are more concentrated in the frontline regions and big cities, and the 3 sectors most affected are housing, transport, and energy infrastructure. About 14% of Ukraine's real estate's been either destroyed or damaged. That's affecting 3 million households. And that ongoing damage and destruction is what's driving those reconstruction costs higher and higher.
And it's very tough to get going on that work while the conflict's still raging.
By some estimates, only 3.5% of the funds needed for reconstruction have been spent so far. It's about $20 billion in the form of emergency repairs and quick government stimulus measures. But getting those funds alone is extremely difficult in the current context of hindered growth. Ukraine's real GDP in 2025 might be growing, but it's still 21% lower than it was before the invasion in 2021. The war efforts meant that deficits are growing with less growth and huge resources having to be directed towards the military and defense. Public debt used to be about 50% of GDP. Before the war, it's now over 100%. This is why foreign aid is so essential to Kyiv at the moment, especially with a ceasefire seemingly so tricky to reach.
Quick word about the labour market now in the country.
The official stats agency in Ukraine stopped collecting and publishing that data when the war started, but there have been other independent estimates made, and they show a labour market that's out of whack and extremely volatile. The unemployment rate peaked in July last summer at 22.8% and then dropped to its lowest level since the war started in November of the same year at 11.2%. And there are huge discrepancies depending on the region you're in. Near the front lines, labor demand far outstrips supply. Jobs have been decimated by the destruction of the local economy. In Kyiv and other big cities in the west of the country, meanwhile, there are dire labor shortages, and internally displaced populations aren't necessarily those qualified to fill those shortages. In short, the war really has a stranglehold on the Ukrainian economy, which is shifting expectations. It's not about growth anymore, it's about survival.
Let's move on to a look now at the markets.
Well, mixed trading in Asia this Tuesday, with a major index in Hong Kong, the Hang Seng, lower following China's central bank keeping its benchmark lending rate unchanged. And in Europe, the tariff landscape on investors' minds this Tuesday. Donald Trump threatening higher tariffs on countries who could be backing out of previously agreed to deals, the EU and the US, for instance. So there, the major bourses, as you can see, in the red. The FTSE in London down 0.3%.
To Panama next. The government has seized control of the ports on either side of the Panama Canal.
Until Monday, those ports had been run by a subsidiary of Hong Kong conglomerate CK Hutchison. In January, the company saw its concession annulled by the Panamanian Supreme Court. The canals have become a focus of ongoing U.S.-China tensions. President Donald Trump had threatened to seize the canal after claiming that China had taken control of it and was using it to overcharge American shipping vessels. Brian Quinn has a story.
A sea change for one of the world's most critical maritime shipping routes, as Panamanian authorities officially took control of 2 ports on either side of the Panama Canal on Monday. Panama's president insisting it's not an expropriation of assets which the state already owns.
We have taken possession of these facilities in strict accordance with Panamanian law and in protection of the national interest.
The move strips Hong Kong-based conglomerate CK Hutchison of the operating concession it had held since 1997. Temporary control of the Pacific port of Balboa now passes to a subsidiary of Danish shipping leader Maersk, while the port of Cristobal on the Atlantic will be operated by a subsidiary of logistics giant MSC until new long-term contracts are awarded. The 82-kilometer-long waterway was completed in 1914 by the U.S., who operated it until ceding control to Panama in 1999. A vital maritime shortcut between the Atlantic and Pacific Oceans, it handles some 40% of American container traffic and 5% of all world trade. It's become a flashpoint in the wider trade tensions between the U.S. and China. On his first day back in office last year, U.S. President Donald Trump threatened to seize the canal, saying it had been overcharging U.S. ships after falling under China's influence. C.K. Hutchison says it's now planning national and international legal action, denouncing what it calls an illegal takeover without transparency or coordination. China has previously warned that the concession seizure would see Panama pay a heavy price both politically and economically.
Charles Pellegrin with Business, thanks very much.